trillion pesos if it lasts for half a year. Estimates by the Asian Development Bank showed that the potential economic losses could hit $23.9 billion or 1.2 trillion pesos, and that depends on the time it will take for the government to contain the crisis. Without the government's policy measures, the ADB pegs losses between 796 billion and 1.2 trillion pesos. That represents almost 4%, up to 6% of our GDP. The figures were based on a 3-month and 6-month containment periods. Metro Manila was placed under enhanced community quarantine in mid-March, which ended on May 15. Today, workers in the capital and other high-risk areas are gradually returning to work as the government loosened restrictions under a modified enhanced community quarantine or MECQ scheme. This MECQ is scheduled to last until the end of May. NEDA Acting Chief Carl Kendrick Chua earlier told Bloomberg TV that unemployment could hit double digits this year. That's as the coronavirus continues to batter the economy. In 2019, unemployment declined to 5.1% from 5.3% in the year prior. Chua is also expecting the country to dive into a recession this 2020 as another contraction is seen in the second quarter. Despite this bleak outlook, Chua said the government is ready to address what he describes as temporary shocks in employment figures as the government rolled out aid programs to poor families worth 200 billion pesos and a subsidy for employees worth 51 billion pesos. Separately, the Development Budget Coordination Committee slashed the projected appropriations for the next 2 years. The DBCC now projects a 4.2 trillion peso budget for 2021. That is lower than its initial proposal of nearly 4.6 trillion pesos. For 2022, the DBCC set a budget of 4.45 trillion pesos, 13% lower than its projection of 5.12 trillion pesos. Budget Chief Wendell Avisado said the smaller budget plan is due to the lower projected revenues amid the COVID-19 crisis. So happy Monday, guys, and welcome to the new normal. So last weekend, I don't know what you guys did, but some of us went out finally jogging on the streets, and some even ventured into the mall. So last weekend saw the reopening of the malls, and you can see on my terminal here right now just the year-to-date performance of our biggest mall operators here and how they actually compare to each other when normalized. So 20 Vista malls actually opened last Saturday. They're opening another one today, but there's several areas, of course, still closed. You've got cinemas, play areas, rest areas still closed. There's also the new normal of everyone having to do their temperature checks, scanning, with the temperatures ahead of the entry, hand and foot sanitation, and the wearing of face masks throughout the whole period. Everyone needs to maintain 2 meters distance from each other. There are now also floor stickers mounted to guide the traffic, and there is a 3-step rule in place for everyone riding things like the escalator. However, not everyone is following. Philippine authorities, have seen, and you can see actually on your screens here, we might be showing you guys some videos here. The malls, some malls that were open were rather crowded over the weekend, and Philippine authorities said they will now crack down on those malls that will fail to impose such controls on their crowds. This from spokesperson Harry Roque of Malacanang. We advise the public not to be complacent and to follow the health protocols. SM Prime Holdings, Robinson's Land, they separately said on their Facebook pages, social distancing protocols are being observed in the retail venues. You've got Ayala Land. They haven't opened yet over the weekend, but they will be opening 18 malls today in Luzon. Now, speaking of malls, I just want to break here SM Prime, which had actually released their earnings just on Friday. You can take a look at your screens here. Let's go through that. First quarter net income at 8.3 billion pesos. That's down 5.7%. That has halted 15 straight quarters of growth for our biggest residential and mall operator here. Now, that's on the back of revenues down by 2.6%. Even as residential revenues were actually up 23% to 11.4 billion pesos. But take a look at your malls. They were down by 16%, and that's in the first quarter. So this is just taking into account 2 weeks of a Luzon quarantine. They did mention, though, that they already waived 8.8 billion pesos worth in rentals from the March 16 to May 15 period. So there's going to be even a bigger hit going forward. Nevertheless, the good news here for SM Prime is that their malls in China, they have 7 malls that had closed in January, are now actually open. And you can actually see SM Prime here opening or continuing those losses. It's down by 0.3% to 28 pesos and 90 centavos. Now, this stock was the one big stock that had dragged down our index on Friday. And you can actually see our index, by the way, opening at 5,400 levels here, down another 1% just in the first hour of trading, 5485.52. Now, already last Friday, that was dragged down by SM Prime. SM Prime fell by 5.2% after it had reported those earnings I just told you guys. This was the biggest contributor to the index's loss, and it was actually bringing down the index by 1.4% down in just 1 week. That's the second week that we've seen our local index declining. Another thing is the value turnovers. People still very hesitant to trade here. Last week, it slowed by 20% to 4.6 billion pesos. Net foreign funds continuing to have that exodus. That actually grew by 32%. So we lost around 650 million per day from the foreigners. And this, of course, amid a lot of these announcements from our acting NEDA chief, Carl Kendrick Chua, who had mentioned all of these issues that we had just mentioned, the unemployment rate shooting up. We had also reported remittances on Friday growing weaker than expected. Now, another big mover that moved on Friday after it had reported its first quarter earnings dropping 38%, that was Bloomberry, down by 2.6%. Now, I just want to take a quick peek at ABS-CBN because guess what? That is back on the trading floor as of today. And already I had just taken a peek at that. At its opening, it was down by 14%, paring back those losses, early losses. So let's take a look at the one-day chart here. You're going to be seeing that major slide as it opened and then recovering a touch. So it's still down by 6 4/10%, but of course, nothing compared to the 14% losses it felt at 9:30 a.m. earlier on. This is after 8 days that it has been in suspension mode. It finally got initial approval from the House of Representatives. That was on Wednesday for a temporary permit to operate until the end of October. So the top court is actually scheduled to tackle the case on Tuesday involving this network. So we're going to be watching out for this stock, which is now back in the game of trading. So more on markets with BDO Capital's Ed Francisco later in the broadcast. Meanwhile, let's check in on other headlines. We are watching this Monday morning. Port utilization in Metro Manila's two major hubs is expected to return to normal with the eased lockdown measures in the National Capital Region. Now recall that port congestion at the Manila International Container Port and the Port of Manila reached as much as 90% in early April, while the whole of Luzon was under enhanced community quarantine. Now, according to Customs, port congestion had been reduced by as much as half as of Saturday. The Bureau says current utilization rate is more reflective of the state of import activities during the ECQ, but the normal activity is expected soon. The lockdown status in Metro Manila and other provinces in Luzon has now been downgraded to a modified enhanced community quarantine that's allowing slightly more work and business operations to resume. Now, with this, the Bureau is expecting a little bit of a rebound. Customs collections dropped 30% year on year to 16 billion pesos. That's in the first half of April, dragging the year-to-date total. Now, apart from the pandemic, bleak economic, weaker global trade, and the slump in oil prices has forced the Bureau to lower its collection target for the year to around 520 billion pesos. The government's economic team likewise downgraded their revenue forecast to 2.6 trillion pesos from at least 3 trillion pesos in 2019. The DICT has clarified that the government's national broadband program is not made to compete with the big telcos, but rather it's aimed to allow the smaller players to actually compete in that arena. The NBP is the government's initiative to improve internet speed and accessibility in the country by rolling out fiber optic networks as well as wireless technology. DICT Undersecretary Eliseo Rios said that through the program, smaller firms will be able to earn more using the bandwidth that they get from the government, as subscription costs will be lower than that of the big telcos. Rio adds that this move will bring down the cost of fast and stable internet in the country. Now, various parts of the program will be built by players including small telcos, internet service providers, and antenna operators in exchange for government bandwidth. Rio said Converge ICT, Philippine Telegraph and Telephone Corp, and Domestic Satellite Philippines have already shown interest in this arrangement. And as for the big telcos, Rio said in a phone interview that the department is already tapping the Anti-Red Tape Authority to expedite the cell site projects delayed by the LGUs. The official noted that some LGUs use these projects to, quote, generate income, giving telcos a hard time to erect their cell sites. ARTA is expected to assist in the quickening of the pace of processing permits to build the cell sites of the major telcos. Grace periods for electricity bills during the quarantine period has weakened the power industry's finances. This is according to the Philippine Independent Power Producers Association, or PIPA. PIPA said, like all businesses, the pandemic affected the power sector's revenues, while fixed costs like labor, supplies, and debt payments remain the same. Now, recall that when the ECQ was implemented, the government ordered a grace period for power bill payments in line with the Bayanihan Act. The DOE noted that power demand has been increasing in areas which are under ECQ, especially in residential areas, as people stay indoors and consume more electricity. PIPA said power generation firms are still adjusting to the situation, saying some suppliers were not able to offer the flexible payment arrangements. Today is the first working day for a lot of many people going back to their new normal as businesses try and resume operations, or at least limited or partial operations. Does this spell the beginning of optimism? Now, here to share with us his insights on the markets and the economy, we have with us BDO Capital's President, Ed Francisco. Good morning, Ed. Welcome to the broadcast.
Good morning, Danny.
Great. Thank you so much. I just want to point out for our viewers here how Ed is literally in his office in BDO headquarters. You know, there. This is not a home broadcast for Ed. He's been back, not just today, but actually been, transitioning into this new normal for quite a while now. So it's very interesting to point out, Ed. Now, I just want to kick off with our banner story and all of these measures that have been going on. A lot had been waiting on what the government would decide. ECQ, GCQ ba, MECQ, ECQ. Now that this is already, let's say, in place, the transition is in place, is this favorable for the business community as such? Are you expecting something less restrictive? Or is this something that, is already going to help spur our business growth?
No, I think the going to MECQ is in the right direction, right? A lot of businesses have started coming to work, 50%, right? Construction people have been coming to work, so at least the build can push again because we really need the infrastructure. The malls started opening last weekend. I guess there was some fake news on it though, but then overall, I think it's been controlled, except for Cavite. So we're very positive. Trading has, at least among the locals, has continued, and we see that. So even our clients on the investment banking side continue to look for transaction and deals. So even from at home, a lot of our large conglomerates have been working, and we've been in contact with them, Danny.
Okay, so good to know that now you're feeling a little bit of optimism in terms of less restriction going forward. Do you feel that businesses were actually ready to come back to work, given that there are, of course, these protocols to put in place? I mean, the workforce is still going to be 50% in your case, for example, for banks and essential businesses. Was this this is not premature? Something that businesses were prepared for already.
Yeah, it's not premature because in fairness to so many associations, the retail associations, the MAP, Phoenix, we've continued to have so many webinars to prepare our employers and employees, cascading it down, which is good because we even had templates on what to look for, what to prepare for, how to ease them in. So many studies we've been sharing that. So now that it's at 50%, it's great. People are ready. We were even our elevator numbered already. Even the pantries have been changed. We already have acrylic shields in our offices. I'm sure the rest of the other industries are doing the same, but this is in preparation for the new normal.
Okay, and let's talk about the economic impact here. Now we are at the thick of it, and the losses to the economy are now hitting 10% of GDP. The stimulus is still below 5% in terms of fiscal stimulus. Do businesses feel that, and you're talking to the biggest corporates on a daily basis, that this fiscal stimulus is in, especially with the hardest hit industries?
Yeah, well, generally the large corporates are there to support the government, right? I feel that we have the fiscal space anyway. So when we listen to Secretary Dominguez and the rest of the team, so I guess as long as they continue to use it wisely and it trickles down with the, it will be well received. From our perspective, we really want to help, especially the SMEs, because they're also the lifeblood, right? So
Yeah.
any support, any more support that the government can give to help them, help in their employees would be appreciated. The large conglomerates are ready; they have a war chest anyway, but they've been positioned and they've been extending a hand already. We're doing our own mass testing to support the government, so that's standard already for most of us.
Okay, and Secretary Chua mentioned that the government could infuse equity in large corporates that have been hard hit, like airlines, hotel industries. What's the business community's reaction to that? Is that not a bit, scary or losing control of the private corporates in the businesses, or is it something that is being welcomed?
I think in general it's welcome because we agree that some industries are really hard hit, right? Like primarily, for example, airports and the airlines. They really are very important. So any help that can be given, and even if it be converted to equity, I'm sure PAL, Cebupac, AirAsia, and the rest will consider it and look at it positively. Some of the tourism related and hotel related also, because they've been closed for so long, will appreciate it. So this new program of equity, right? They have an equity program. It's like a national finance something.
Mhm.
It's a merchant bank. We did have that before in the old NDC days, and I think it's something that will be well received. So, and it's not going to be absolute control anyway. As long as they get board seats and they get appropriate governance in place, that will be welcome. It's a public-private partnership already anyway.
So even for investors, and let's say foreign investors, is that a positive thing? We've seen an exodus of foreign funds on the basis of everyone is on risk of sentiment. Now that the government is taking or possibly taking some stakes in troubled firms, does this signal a positive thing for offshore investors to come back in, or is there going to be some hesitation because there's going to be a political element in?
Yeah, you can see it as a political element, but in a positive way, Danny, because at least that means the government
Okay.
is there to support and to show that they want the private sectors to survive these vulnerable industries. In terms of the foreign coming in, I guess some people, in fact, even the locals have felt that our stocks have really are too undervalued, unappreciated. So some of them have continued with their buybacks in addition to the foreigner selling. Some are even considering tender offers and the listing. We're trying to encourage them not to, right? But it's a sign. In a way, it's a positive sign. They feel that their stocks are undervalued. These owners feel that and not appreciated. So they're really looking at other ways to raise capital. But they're not throwing in the towel. They're just saying that hey guys, you have to realize that we're so cheap already. You should start buying in. And me, from an investment bank and security side, we're trying to espouse that and educate our investors also.
Okay, and people still have money to buy back their
Yes,
shares despite
yes,
all
yes.
of this income hits. Let's talk about the earnings, Ed, and the reaction to the first quarter earnings. Expected, disappointed, better than expected, considering that was just 2 weeks of a Luzon-wide lockdown. How does it color the rest of your outlook?
Yeah, of course, especially the GDP, right? That minus point two, because when you factor it in and you try to you're the mathematician, but you're the expert. But I guess we were trying to estimate what the effective loss really was for the last 2 weeks, and it's a big number.
Mm.
So we're right. So we'll probably see a big decline in GDP, right, for the rest of the year or for the first half. But despite that, we're still very positive. Of course, that's been factored in anyway in the pricing. Eh. So even when you listen to Ricky Rason and Ramon Ang, right? You know, they as long as we can help the people this year, we're not even trying to make significant earnings. What's more concerned, they're more concerned about saving lives. I guess that's how the Congress are thinking. But of course, they have a responsibility to their investors. They're trying to still make the most of what they can. But even let's say the Gokongwei group and the C group with their malls, the fact that they waived the rents, that hits them their bottom line, but they're really
Oo.
thinking of the SMEs, right? So it affects the stock. But on the other hand, we think that it will come back eventually because if we just we have to nurse the smaller companies, I believe that's they're doing that, and then hopefully by them being recognized, when they come back, they'll come back strong. It will also help the big guys. It's helping each other really.
And you can see in my terminal here our PE, our forward PE. So it's now actually bounced back at least since it was heavily sold off on May 19. If you take a look at from May 19 to now, we're still at a 20% plus recovery from
Mhm.
those major lows here. Is this an uptrend enough for you? I mean, does this already signal the beginning of the price catching up na rin with, as you mentioned, the earnings and normalizing?
I hope so. The fact that maybe today is a significant, right? Because it's a MECQ. The fact that in theory, GDP should double from what it was last week because 50 from zero now it's going to 50% or from in fact more than double. For even just the banks, for example, from 25% last week, today we're at 50% allowed to come to work. And that will now mean that that the economy will start churning. The fact that the malls are open, even if attendance is measured, and of course there's lots of I guess precautions. That will get people to spend again because we have to encourage our locals to really spend also because there's liquidity anyway in the system. We're seeing that. Eh. They're just being careful. They just want to make sure that they have something for the rainy day. But if we all go out and spend, especially support our local businesses. That will help all the companies get back, and then their PEs will shoot up again.
And any insight on why SM Prime did not slash its capex? It's just not. It's still going on with its expansion plans, whereas everyone is trying to be prudent. And actually, even the slash, for instance, RLC had slashed its capex also, and RRHI, and the markets actually reacted positively, according to some analysts, saying that they're happy that they're pivoting to e-commerce and other such stuff instead of continuing with the mall business. Why is SM Prime still banking on the traditional brick and mortar buildings and sort of pivot like Ayala is doing?
Um, I cannot guess what Jeff Lim and of course Hansi are doing, but they're all very prudent anyway. Maybe they just haven't announced it. But of course, they're always looking at all the angles, looking at ways to invest for the long haul. As you recall, when Mr. C built the North Mall in Quezon Boulevard, what, decades ago, it was seen that was during the real, I think, after martial law or something when the real things were really down, and he went against everybody, and it came out to be correct. So I think the SN group is just being well positioned. They're just ready to support also in a way because like they're like our big brother. So however we can help other companies by lending them, by taking a position if necessary, they're ready. of course subject to following all the rules. But yeah, I guess that's why being quiet on capex just means that they're just being prepared. They always have this large war chest anyway to help companies or to acquire or to merge or have more alliances. I guess that's the way they're looking at it.
Any idea why the sell off after the earnings came out? Just was the I mean, people were expecting better than expected, better than what they had announced. I mean, everyone knew that the malls were shut down, diba? So and the malls are 47% of the business. But still, why worsen pretty bad reaction to that? Yes.
No, I agree with you, Danny. I'm also disappointed at the market reaction because the SM Group has been transparent anyway, right? And they've already announced anyway. Like for example, a few weeks back, the pure retailers like Pure Gold were doing better because of course they were open, right? Versus the Robinsons, the Philinvests, and the SMs with the malls that were closed, where they couldn't make the revenue they had, and they in fact had to forego a lot of their lease expenses. They announced that anyway, and they were being subsidized really by the department stores. So I'm disappointed why the market is reacting that way because they were transparent. And I don't, and of course, the new normal will be, yeah, of course, because of social distancing, there might be lower number of customers coming in daily until a vaccine is created. But on the other hand, I guess they can easily pivot and reposition because I'm just guessing if you have a lot of this space and if you really have to close it down eventually, if BPOs and the POGOs come in and you can easily convert this space. Some malls already have that. I think Double Dragon has that in the EDSA Ross Boulevard area, where there are malls and their BPOs, POGOs are all on top of each other, so it can work.
Okay, last question before we go to just the IPO question. On consumption, you've also got, and I just want to break for viewers here, 7-Eleven's first quarter down 7.5% year on year. You'd already mentioned the consumption stocks that you were doing really well. Why is this? Why is 7-Eleven not doing well in the first quarter? Does that have anything to do with the ECQ whatsoever? They're the ones that have almost 100% operation during this entire period. What does that say about consumption?
Yeah, well, maybe part of it also, and this is just a guess, because of the liquor ban. Maybe a lot of it also was related to being able to buy beer and the wines and the vodkas and the gins. That might have had significant profits for them, and maybe that's one of the things that contributed to the lower sales, right? And the fact also that because in a way 7-Eleven has positioned very well with Mr. Paterno of having to eat, being able to eat there. The fact that you have everything you have to buy has to be taken out could have reduced sales. But in general, also if you look at, let's say, I was also looking at SM Pure Foods and Miguel Pure Foods. The reason, again, also their numbers haven't been as strong is because while the Pure Foods, the food part was very strong, you have to remember the bulk of the revenues come from the beer, and because of the poor liquor sales and liquor ban in some parts of the country, they were not able to sell. Unlike Century Pacific, also of the POS, they've done very well because people realized they wanted the safety in the canned goods and being able to buy it. So I guess people wanted safety, and in fact, some of the fresh fruits have not done as well, but the canned ones, because it's clean, it's sterilized, have done well. So people have gone back to the basics, Danny.
Okay, so it's not necessarily the retailer supermarket, but actually the producer of the canned goods that's benefit right now.
Also, yes.
Last question on the Mary Mart IPO. I don't know if video is underwriting this, but that's very brave for them. If I could say so myself, be braving this volatile market, and they're saying that any increase in or decrease in the demand for discretionary products will be lifted by the demand from non-discretionary products. But they're very similar to a 7-Eleven. Tell us why right now they're still launching this IPO, and will they be able to even do their capex or expansion plans?
Yeah. Well, anyway, Edgar Injab is a very astute businessman. I respect for him and his team. So let's wait. No, I guess there are a lot of believers anyway in Edgar's story and how he can move it. So if I'm hopeful that he will be able to pull it off because it's great to show that despite COVID, we can do capital market deals. Same reason also. I'm very supportive still on Ayala's REIT if they can pursue that. And then in fact, yeah, there are some other deals that we continue to work on the side, working with the SEC. Danny, so it's not like even during ECQ, we've been working in the sidelines or quietly, and the corporates have been working because they still want to tap the market, so there's still interest.
Okay, so people are still gonna go ahead with their plans. The life doesn't stop because of this pandemic. Thank you so much,
Yeah.
Ed Francisco of BDO Capital, for joining us today. Just a very quick peek on our terminal before I let you guys go, because I just want to highlight how LTG Group is the best performer. That's up by 4.3%. They had just announced their first quarter net income, 6.21 billion. That was up by 76% because of the tobacco arm. So the tobacco arm up 76% to 5 billion pesos. Very interesting results here from LTG Group. Markets greatly appreciating that this morning as our index slides to 5,400 levels. And that's a first look into the business day. Today is Monday, May 18, 2020. Thank you so much for watching. Catch us again tomorrow, 10:30 a.m. I'm Danny Laurel, and we are One News.